Hey, good morning, everyone. It's Coach Chris coming at you on Saturday morning, October 9th at 8:30 a.m. Central Time with a recap of Friday, November 8th, 24's trades using the ESChannels System. So it was, I wouldn't say a great day, but it was all right. I made $92 using the system in 4 trades. I had $111 in winning trades, in 3 winning trades, and 1 loss of $18.75. Average winning trade time, 1:13. Longest time in trade was almost 2 hours. So very interesting day, I'll just say. I was expecting more of a pullback than what we saw. Especially later in the afternoon, it seemed that the buyers stepped up again. I'll show you my trades here in a second. Let me just get this off the screen. For some reason, when I took the screenshot of my actual chart, it did not show the executions on here. So here is a list of the executions of when I bought and sold. And what I did is, excuse me, on the chart, I manually put the entries just so we'll be able to go through it. So I've got this chart shrunk down a little bit. This is a 5-minute chart of the MES, and I've overlaid our system in here. The blue basis line is what I'll call the home line, or the line where price likes to revert itself to. And then these are the channels in either direction as the price deviates from our main base price line. We enter trades as it touches these lines in a given pattern, with the intention that the price will then revert back to the blue basis line. So we had a nice quiet overnight session. You'll see how straight and parallel these lines are from left to right. Very nice. And then you'll see here, starting at about 4 in the morning, there was a fairly substantial sell-off. And it came down. Let me just stretch this out a little bit. I obviously was sleeping at this time, but it came all the way down to that first green line. I missed that entry, and I started trading right around here just before 6 a.m. Central Time. And so you can see most of the time on these, you're going to see a V pattern. Sometimes it'll be elongated like this one was, or you'll see rapid, recovery. So I obviously didn't see this price action as it was happening, but when I got up, I could see there was a pretty big sell-off, and what normally happens is price is going to revert back at some point, normally. So I turned on my computer somewhere in here, and I could see price was retreating, so I figured, well, let's get a piece of it. I entered one contract here, and then sold when it got back up here. Excuse me, to the blue basis line. And so then you'll see right around here, right here is when the market opened, and it was off to the races. Thing just steadily, and you can see here how these lines get expanded due to the volatility and price action. They get pulled up. Now, my normal rule is do not enter when these lines are pitched up to this degree. However, I had a thesis and bias, which we know what that can do, and it was wrong. It turned out to be a wrong bias, but I got lucky. So I entered. I just followed the rules of the strategy, other than the fact that we should not have entered with the lines pitched up to this degree. When it touched this first green line, with the intent that it was going to pull back down, shortly thereafter. Well, it did pull back, but it only got back to the purple line. It never made its way all the way back to the blue line. Well, pull back in that V-shaped pull, and then it started really rapidly increasing. And so, knowing that it was probably going to come back before the market closed, because now we're about 12:30 in the afternoon. I needed to get my price down on to average the price of this down as it was swinging up, with the hope, like I said, that it was going to retreat. So I got into one contract here when it was between the first green and the second green line, halfway through the channel, and it eventually got up all the way to the second green line. And I just really had a strong gut feeling it could not keep going before the weekend. They were not going to bring this thing up and then let it sit over the weekend. So I got into another contract there and was lucky enough to time it as such that then the retracement happened. It did not get all the way back to the blue line. I closed on this big red candle here. It got about halfway down, and I think I was up like, I don't know, $100 or so on the 3 contracts at that point. And it was now 2:45 in the afternoon, and I just figured, well, I don't know. I'm not going to worry about these last, what would that have been here? 3.5 points, just in case that it did reverse back. So I got out on that big push down, and sure enough, it did go back. I still would have been profitable even with this pullback to the purple line because my basis was, somewhere up in here. So I still would have made money, but obviously I would have gave back quite a bit of the profit. So I still believe this coming week we're going to have to see, in my opinion, some type of a pullback because, yeah, the news of the new president was awesome, but to see the kind of price action that we did here on Tuesday and Wednesday, I mean, just look at this. Anytime there's a move like that, yeah, it's elation over the event that happened and anticipation of what is going to happen, but there also has to be some basic fundamental valuation that occurs at some point to rationalize that type of a price move. And I just I see more headwinds ahead of us than I do tailwinds, at least in the near future. And so I just have to believe we're going to see some type of a pullback. Whether it happens this week or not, we still may have the honeymoon phase here this week where it doesn't pull back. But I would think we're probably looking in the neighborhood of a 3 to 5% pullback, and then maybe even as much as a 10% or more. Because remember, we were already not overvalued, but we were already setting record highs, or just about to, on most of the major indexes before the election, and now they've driven it up even further. And so at some point, prices do have to adjust, in my opinion, a little bit. Now, we're day traders, okay? So we're just going to react to the price in front of us. We're not going to, really go all out with a huge basis. But on the longer term, I think we just need to be aware of that. So we want to be careful we're not caught offside if something like that were to occur. So if we continue to use our risk parameters, there's just no way we can get burned too bad if that does happen, because the system has the risks in place. Depending on the size of your account, you can actually set a dollar amount value, like say if the trade goes against you more than $150, $250, or $300, you're just going to close it out irregardless, and then you'll make up for it in the other trades. I'm doing over a 70% win rate with the strategy, just following the rules. So if we do get, we're going to get losses. I mean, they're inevitable. There's no trading system that's perfect. And so you just want to, when you do have the losses, minimize those as much as possible while giving the underlying equity enough room to handle the normal up and down movement, but yet still not getting to a point where one loss can really cripple the account. So that's the recap from Friday. Hope you guys have a great weekend, and I will talk to you next week.